Hey everybody, Boris Lesser, BK Force. Welcome to our BK Weekly Technicals for 10/20, 10/25, 2014. Where are the trades? Well, what an unbelievably volatile week this week. This was incredible movement, especially if you look at the Wednesday candles. The Wednesday candles, of course, were probably some of the largest candles we've seen in the last 4 or 5 years in terms of volatility. But I think the net takeaway when you look at the charts kind of on a longer term basis basically is yes, Euro continues to be in a downtrend, and this is a natural bounce off of a short covering rally that effectively, I think, sort of finds its top here at around the 29 level. So we're continuing to be trading essentially the 25 to 29 range, and we're kind of, excuse me, at the upper end of the range for the time being. So the upper end of the, if that means that we're at the upper end of the range here, it's a relatively decent risk reward here to be selling against the upper end of the range here for a possible a retrace back down to 26, 27.50. Support pretty much stands at 26 for the euro. The 25 was a kind of a spike low, and unless we get a continuously negative drumbeat of data, which we may, we do have a couple of negative events coming up. We have the PMI services coming up. We have the IFO, so those things could trigger further downside trades in the euro, and therefore provide a relatively decent price action down to the 26 level. In any case, I think the 29 is a relatively safe stop at this point, and I think given the preponderance of risks here, the trade now becomes back to the short side in the euro after being so grossly oversold. In dollar yen, we finally did find a bottom here at 105, the spike bottom. Again, huge Wednesday candles, but now I think we're really operating against this 107, 107.50 hold. The dynamic in dollar yen has changed radically. I mean, we did have finally a big ray of sunshine and hope today in terms of positive consumer sentiment, but overall, U.S. data has not been as positive. Although I'll take that back. Jobless claims were pretty good. It's been kind of a dichotomy where you have the jobs numbers positive, but the spending, the business, the housing numbers, none of them really that positive, and that's really I think the key to pushing dollar yen higher. It's all going to be a rate story. It's all going to be a yield story. Unless U.S. yields begin to trickle back up to 235, 240 on a trade, I think you're looking at 108 probably as pretty much the top end of the range. It still looks like we could climb back through this 107s, 107.50s, but this Wednesday massive candle is going to operate pretty much as a serious sell point for a lot of late shorts that want to come back for a double test bottom. Either way, the bottom here now is really clearly defined as 105. That's really going to be the big test bottom here. If we do drift back to the lower side, it looks again like chop for dollar yen. Not very clear trade really for the next couple of weeks as we work it off. Cable looks to be actually surprisingly strong. Now, what I find interesting about cable is that we have this preponderance of negative rhetoric, negative data, right? So BOE saying, oh, we're not going to raise rates anytime soon. The chief economist saying that the data has really started to slow down, blah, blah, blah. UK data sort of mixed, we're starting to see employment data still pretty good, but the average wage gains still not really inflationary. Inflation data itself is kind of low because of gasoline prices. But overall, what you're seeing against this kind of background of negative fundamental data is a pretty strong bottom forming here. This has really been a pretty decent 59.60 bottom, and we're really not giving up much on the ground. So in many ways, I think it's kind of interesting that cable may be a relative strength story. It may not be a story where we're going to go up, and certainly the 62 is going to be a big overhang. But if cable remains a relative strength story, it could be interesting on the crosses as a potential trade. And then lastly, Aussie, just kind of consolidating this. The Aussie trade here is this 86 to 88 could be a very much of a churn for quite a long time. After we've had a big liquidation down over here, I don't see much. Chinese data is really going to be relatively soft. You really have to have like a big bounce back in risk, and remember, and a sort of a assumption that U.S. rates are going to stay flat much longer, but Australian rates are going to stay at these levels to kind of have us recover. But in many cases, in many ways, I really feel this whole this diamond formation in the Aussie just presents much bigger risks to the upside, meaning that it's a sell the rally mode in the Aussie in many ways. And in many ways, when I'm talking about the pound crosses, I wonder if I have the Aussie pound here. Let me see if I'm gonna have to pull this up. Give me just 1 second. The Aussie pound trade looks very similar to sort of, the pound Aussie trade looks very similar to the pound trade in the sense that we have the strong double bottom with a breakout to the upside, and it feels like it really wants to go higher. I mean, even a takeout of the of today's highs looks relatively bullish all the way up to 86, which is the resist level. So the pound against the COM dollars to me is kind of an interesting trade at the beginning of the week. Let me just take a look at the Kiwi and the CAD. So Kiwi is trading a little bit better, but still, it's actually trading better than the Aussie. The 77, which was the spike bottom off the RBNZ threat of intervention, was pretty much the strong bottom. We talked about the fact this was a spike bottom and it was a pretty good buy. It definitely was for a bounce back up, almost up to 80 here. But now it's back to consolidation, back to range trading. And it's probably going to be, again, pick it up at 78, probably give it up at 80 as we consolidate a lot. We work off a lot of this downtrend. It is very unlikely that we're going to make a V-shaped bottom here. V-shaped move here where we're going to break out above the 80s. But if we do take out 80 with conviction, that is sort of, close on 80, 50, that's worth noting because that could really mean further upside gains for the Kiwi as we go forward. And then last, on the majors, I want to take a look at the dollar CAD, which is kind of flamed out at above the 130, 113 level here. And that is another interesting thing, is the fact that the dollar CAD has sort of flamed out over here suggests that now you certainly have a very well-defined risk, right? I mean, it's not like there's a lot of positive data on the Canadian dollar. Oil prices have been going down. Canadian data has been, lackluster in so many ways. But we did see a little bit better CPI net data today, and it looks like this whole hold, I guess it's 113. What was the high here? 61, right? 113.61. Kind of 3 days in a row of topping out formation. Unless we break this to the top side, suggests that maybe we have relative strength on the CAD, which actually brings me back to the idea of, if you like relative strength on the CAD, this Aussie CAD to the downside, also well defined, could be an interesting trade for at least maybe 98 as the week progresses. It's a very, very slow trade, but I think it's a relatively decent trade to trade this back down towards the 98s against the 99.50 stop in the Aussie CAD, which was the spike stop. This is just sort of a way to trade CAD strength on a cross basis. And then lastly, looking at the yen crosses, they've certainly gotten decimated. Now they're coming back up, but they're coming back up against now these big resist levels. I think, and, it's 70, basically 72, 73, and certainly 74 in pound yen. But I would say 72, 73 would still probably create a lot of resist. In euro yen, where's my euro yen? Here's my euro yen. In the euro yen, it looks a little bit better because you have this sort of spike low. But again, you're coming up against the 37s, which was the breakdown level that could potentially present a little bit of a selling opportunity. Generally, the key thing, unless you have this radical change in U.S. rates that busts dollar yen back to the top side, one of the more interesting and easier trades to probably take is going to be the short against this 107.50, 108 level in dollar yen, because certainly this crash from Wednesday is going to operate as a pretty serious resist level to a lot of traders going to be looking at the charts. So that's kind of how the week shapes up. It's really going to be a reaction consolidation week after this very volatile week that we have now, and a way to probably trade it is going to be to finesse yourself on the top of the ranges or the bottom of the ranges, depending on how the trade moves. But it's really going to be a way, I think, going to be a time for us to trade the upper end to the lower end of the ranges for the time being. Wishing you guys the best of luck, the best of trading. This is Boris Schlossberg, over and out.